Good afternoon, traders. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. And for this edition of Trade Talks, we're going to focus on market structure, which is an ever-evolving conversation in the industry. And Nasdaq is leading the way with market structure on Project Revitalize. Joining me is Tal Cohen. He's a Senior Vice President of North American Equities at Nasdaq. Tal, thank you so much for joining us. And this really follows on to when we had Tom Whitman, our Global Head of Equities, at the House Committee yesterday, talking about market structure along with other industry executives. So I want to hear your take on this and some of the concerns that we are facing as an industry.
Sure. So what you had heard yesterday from Tom and other members that testified in front of Congress yesterday, or the House Committee, was around the shrinking number of public companies in the U.S. We're almost down by 50% from 20 years ago. And so I think there's general consensus that this is an issue. And what Project Revitalize is looking to do is to ensure that the public markets are an attractive source of raising capital for these companies. And the reason that's so important to us is these companies, these small and mid-sized companies that are emerging growth companies, they are part of the economic engine of growth. And so job creation and broader distribution of wealth, they're the kinds of companies that provide that to us as an economy.
Is it because of regulatory reform, or what are some of the roadblocks that these small and mid-sized companies face that make them not want to necessarily look into capital markets?
Yeah, so that's a great question. So within Project Revitalize, we've identified three key themes, if you will, in terms of things that contribute to these issues. One is around broader market reform or broader regulatory reform, and that would include tax reform, litigation reform, proxy reform, Sarbanes-Oxley, and finally proxy in terms of what that means today versus what it meant 20 years ago. The second would be market structure reform. And under market structure reform, what we're really trying to do there is say that a one-size-fits market doesn't make sense for smaller and mid-sized companies. Also, we're looking to give issuers a voice in that debate. So the centerpiece for us within the market structure reform would be something we call unlisted trading privileges, or trying to revoke unlisted trading privileges, which goes by the acronym UTP. Underneath that, by the way, is we'll talk a lot about, and you heard Tom speak about it yesterday, is intelligent tick sizes and intelligent rebates. Then finally, the third theme would really be about promoting long-termism. And this is really about the evolving role of activism in America and what role it plays with small and medium-sized growth companies.
Well, I think a lot of small and medium-sized companies would agree with you, because there's a big difference from a $25 million market cap company versus a $700 billion market cap company. Just even in terms of trading when it comes to shares and liquidity. So I think that's something that the marketplace would certainly welcome. So my question to you is, what's feedback been like?
Yeah, so the feedback's been fairly positive. So first of all, they agree with the problem statement. I think there's broad support for this as an issue that we want to tackle as an industry. We have an incoming SEC chairman who said capital formation comes first. We have an administration that's talking about deregulation. So when we talk about deregulation for a moment, we're not talking about scaling that back. We're talking about right-sizing regulation for these companies, to your point. And so we've gotten broad support on that. A lot of the proposals we put forth have been also broadly supported by the community. But we also know that when you roll that back or you change it, you need to account for the benefits that have been accrued by the industry through changes like Reg NMS and Reg ATS. And so some of the feedback that we've gotten there is keep the benefits of competition that makes sense, and I'll talk about those in a minute, and then the resiliency that competition has allowed for. And some of those benefits of competition really talk about the checks and balances that the industry wants to see if we revoke unlisted trading privileges, which means basically we would then consolidate liquidity on a single exchange versus across 13 exchanges in the U.S.
Well, let's wrap it up. I want to know, where do you think we'll see in the next 12 to 18 months?
Well, we'll continue the advocacy effort with issuers, with buy side, and obviously with the sell side clients. We'll engage the SEC and the new administration on capital formation, because we think this is the #1 topic people should be talking about and thinking about. And as we think about, once again, job creation and the economic growth engine, which is the U.S., we need to make the public markets as attractive as they could be and be competitive not only within the U.S. but globally.
Okay, Tal, thank you very much for joining me. Market Site and traders, as always, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.